Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look at the gold market as usual. So today guys, we're taking a look at the fundamental background on the gold, because a lot of different opinions currently stand in the market. So one analysis tell that gold should rise in the longer term perspective and should still show the new highs or at least significant upward actions. Others tell that this rally is over and market is ready to drop as the overall situation with the vaccination and returning the world back to the life will press on the gold. And we have tried to find out the truth in this situation, making our own vision of the current situation in the gold market. Well, and if you do not want to know the details and do not want to read the update, I would say in 2 words that we suggest that gold market still should show significant pullback. This will be last upward swing, let's call it in this manner. It should be significant, somewhere back to the above 19 even area. But in a long-term perspective, we probably agree that the gold will be depressed and stands under pressure and will turn to the bearish type of action. It will be closer to the end of this year and in 2022 and in later years. There are lots of reasons for that. First of all, vaccination sooner or later, but it will make the positive effect if even the vaccine will be not 90, not 70, at least 60% effective. It will definitely be 2 times better situation than right now. The treatment of the disease is also not stands flat. It's developing, and currently doctors already have better knowledge, better tools for curing, some new pills appearing from the treatment. And that will stand on progress, and even if vaccine will not be as effective as it sounds, the treatment process will should be more effective, and that will bring some fruits in the future. Finally, with more stimulus, with the returning back to the normal life, the inflation will start to rise definitely. And that will press in the gold market in the long term. That's the view why we think that in the perspective of about the year, gold probably will turn the trend and the bearish. Still, in the perspective of the 3 months, probably we think that gold is ready for, or at least should be ready very soon, for last effort, last upward bounce. And for that, it's also a lot of reasons. First of all, we think that the euphoria that market stands right now is a bit overestimated the situation. So investors try to represent the events that is yet to come as it already has happened. Nobody knows what the effectiveness of the vaccine will be, where it starts to give the first results. Most brave opinions, brave suggestions suggest that we should get the first data on results of the vaccination somewhere in May. It's at least a half a year until the first results will be. What results will be? So actually, yesterday in the report on the Forex market, I said in detail what the problem between laboratory testing, laboratory production of the vaccine and industry production. The major difficulty is that your industry production hardware should be tuned as perfectly as a laboratory production. Other words, other way, the vaccine will not be totally equal to the exemplar that has been tested, and it means that results will be different, probably not in the better side. So that's the difficulty, and where they will tune this hardware and what volumes the production will start, what real statistics will bring. It's all uncertainty factors that decrease, well, the euphoria effect, I suppose. And we suggest that this euphoria is good for us because it makes pressure on the gold and provides for us a chance to buy gold at a better price. But we think that this reaction is definitely overestimated. Second, what we see in the short-term perspective is that stimulus. Stimulus will come probably sooner rather than later, when the appointment of the Janet Yellen on the post of Secretary of Treasury. It should provide more stimulus, as the Democratic Party in general is tuned and aimed on higher growth and higher inflation, higher budget deficit. This historically happens, and this probably will be continued. That provides additional background for bounce on the gold market. Speaking on the interest rates, it's a bit too early to say that interest rates are rising. And in the short-term perspective, we expect that economy statistics will be poor because results of the pandemic can't be cancelled, and it still will be pressed on the market. So one thing is this emotional reaction and the sentiment when you expect the vaccination, and another thing when the vaccination makes impact on the real economy results. And currently, it's the problem with that. So from the economy, we would not expect, at least for a few months, any improvement. And that definitely should keep interest rates flat. Take a look at the 10-year treasuries. You can see that this hardly we could call as a reversal. So it's mostly reminds some flat sideways action, and here in general, guys, you could see the signs of the bearish dynamic pressure. So I'd not exclude that in the nearest few months it could be another spike down. So we're in an area of the over 6 or 5 probably before the real reversal could start and inflation will start to rise. That also should be supportive for the gold market as interest rates will turn more negative. So that's, shortly speaking, the background why we think that another upper bounce here should happen within the few months probably. This is weekly chart, guys, and this stuff that we are watching for. Actually, our major trading plan suggests that we should consider the OP that creates an agreement with the 1733 level. This level is important, although on the chart you could see that it's somewhere in the middle of the action, but if you will take a look carefully, you will see that right from this level the major part of the trend has started. That's why it's important. An agreement for this level is important 2 times more important. So additionally, we have the advantage because take a look slightly below, we have the confidence support that is weekly and monthly as well, and we seems that this could be a good idea considering taking the long position at the agreement with the stops below the confidence. That will save lots of money because you have great protection with these 2 levels, and this could be, from the statistic, it's good probability of the pullback. As a pullback, we think that at least the 618 bounce should happen of the whole downward action here. Finally, the technical reason, take a look that here gold has great upside momentum, and it can't just turn down in a V shape and start dropping right back down. So this momentum should be cured, and for that you need to show the pullback first. So rest of the momentum should find the exit, should be released, and only after that gold will be ready for downward continuation. So that's our trading plan. From that trading plan, you could see that our major task is to not miss the area where we should consider taking the long position. We need to keep an eye on the possible bullish patterns, bullish signs, but probably it will happen a bit later, not in the coming week, because our primary target stands slightly lower than the market stands right now. On the daily chart, guys, we do not have something really special. The breakout of the confidence support and the OP targets creates an agreement where initially suggested the possible taking the long position, but then we canceled this trading stop. Tells that the reasons for the downside breakout is really serious and strong, and that increased chances of the further downward continuation. XOP of this ABCD pattern stands around 1672 and creates agreement with the 1690 area. So on the daily chart, this is next level. On the 4-hour time frame chart, market has hit the OP. As we said, it will be more important because market currently treat as important the Pfizer collapse here. And that's why the ABCD pattern from the Pfizer collapse is more important than the OP on the daily. And take a look, market has dropped precisely to this target. This target has hit, butterfly 1618 target is completed, market show minor bullish reaction here, its response. XOP, guys, of this Pfizer collapse agrees with the weekly stop because the target stands 1712, which is very close to the 1730 on the weekly chart of the major OP. So it absolutely doesn't contradict to overall weekly stop that we considering currently. In the shorter term, we could consider possible upward bounce, but not to buy gold here, but for taking the maybe short position. Those who would like to trade gold short, it could be a chance to take the position for the downward continuation. We suggest that's more probable that gold market could show just minor bounce, instead standing inside of this most recent swing, so it would be minor regardless cheaper to sell with the downward continuation. But if still this will be deeper retracement, most probable target somewhere around 1850 by a few reasons. First of all, because this is a strong confidence level. Second, because it's natural, previously broken lows. We can't exclude this bounce to the 1850, 1840 totally, because market stands oversold on the weekly chart. And also, it's at the Pfizer OP. So theoretically, from that standpoint, indeed, some deep retracement, retesting of the 1850 could happen, but we think that it's not over yet, downward action. So it will be just a pullback, because another leg down probably should happen before real significant monthly pullback will start. Maybe it will coincide with the moment where the Joe Biden will get the inauguration, will make the first appointment, and will make some first statements on the stimulus, on the economy policy in the United States, something of that sort. Maybe it will support the markets. Currently difficult to predict. But, shortly speaking, that's our view on the gold. We think that it's not over yet, and a lot of trading stops will still get in December.